All right, everyone. Well, welcome to this Philly Tech Week event, Doing Well and Doing Good, presented by PACT. My name is Danielle Pinto. I'm the Senior Director of Member Success here at PACT. And I would like to first off start by thanking our sponsors and partners for this particular program, Cozen O'Conner, RSM, and Impact PHL. I'll get us started with a few house rules, and then we'll turn it right over to our moderators because we have a lot of ground to cover over the next hour. So all of our participants, all of our attendees are muted with no video. But we will have the Q&A window open for you to ask our panelists questions. We can take questions throughout, whether live during the segment or text chat. Our panelists can respond that way as well. The chat window is open if you want to comment, message, introduce yourself, please do. Like I said, we have a pretty robust program, which will be broken down into two 30-minute segments. At approximately 2 o'clock, we'll then end the formal program and go over to our virtual networking lounge for informal face-to-face networking. Some of our speakers will be in there. You can ask follow-up questions, and we will pop the link to that lounge into the chat later in the program. So to get right into it, I'm going to introduce the moderator for our first segment. Michael Crossey is co-chair of the Emerging Business and Venture Capital Practice at Cozen O'Conner. And Michael's going to pop on in a second and introduce our first set of panelists. Thanks so much, Michael.
Thanks, Danielle. Yeah, well, welcome everybody. I am really excited to be here and just to talk about this area. This is an area that we're really passionate about. Cozen's always looking to find ways that we can make an impact, and we love partnering with companies that are looking to really make a difference in the world. So I'm really excited to have with us Catherine Griffin, who's the founder of Impactablex, Yvonne Fu, who's an investor with Social Venture Circle, Christina Keitt, who is the head of sales and relationship management with Mobility Capital Finance, and also Robert Cheetham, who's the president and CEO of Azavia. And I think we have everybody on screen now. So thank you guys so much for being here with us. And maybe just to get us started, if you guys could each give a very quick, couple second sentence or two elevator pitch on yourselves and your organizations. We can start, I guess, Catherine, with you.
Sure, happy to kick us off. Thanks, Michael, and thanks PACT and Philly Tech Week, Cozen and Impact PHL for hosting this event. I'm Catherine Griffin. I'm the founder and CEO of Impactablex Analytics. We work with startup companies ranging from seed through Series C to define, model, quantify, and forecast social and environmental impact as a derivative of sales, so they can more effectively execute on their mission and they can leverage impact to drive the growth of their business. Delighted to be here. Thanks for having me.
Thanks so much. And Yvonne?
Yes, hi, good afternoon, everyone. Very happy to be here, to be part of the panel discussion today. Thank you for hosting the conference, for having me here. I have a background in financial service industry, worked in financial service industry for over 20 years. And for the last 5 years, I've been a very active angel impact investor. I'm a member of Svc Philadelphia. Svc is a national network that connects investors and founders with the mission to put together capital expertise and connections to create a better economy inclusively. Again, very happy to be here today. Thank you.
Great, thanks so much, Yvonne. And Christina?
Hi, everyone. My name is Christina Keitt, and I'm the head of sales and relationship management for Mobility Capital Finance, also known as MOCAFI. We are a startup fintech that has partnered with wonderful investors like SVC, other seed angel investors, and some Series A financing we did as well in late 2020. We are focused on closing the wealth gap, financial literacy, education, and partnering with municipalities to disperse funds to the most underserved during crises like the pandemic. So we were able to do that with the help of many of our investors, some on this panel in 2020, help some of the really in need communities get funds to them really quickly from dispersing entities like municipalities, state and local, and CBOs, community-based organizations. thank you, Philly Tech Week, for having me. I'm excited to be here, excited to discuss our mission with the panel, and looking forward to our discussion topics today. Thanks very much.
Great, thanks so much, Christina. And last but not least, Robert.
Good afternoon, everyone. My name is Robert Cheetham. Thank you to the hosts and the Philly Tech Week folks for organizing this. I appreciate the opportunity to share some of our experience. Azavia is a local Philadelphia-based firm. We started here in Philadelphia. We're about 50 people. We're a software engineering company that focuses on building geospatial software tools, specifically for civic, social, and environmental impact. We're a certified B Corporation. We do work all over the United States and around the world in a broad range of areas, from water to climate change to elections, transportation planning, satellite imagery, and a variety of other things, but all related to place and all related to tools for social impact.
That's great. That's great. Well, so I was thinking it probably made sense just for anybody in the audience and for myself as well, to get a little bit of background just in general for, setting the table on, what exactly impact means in general. So Catherine, perhaps we could turn it over to you just to get your thoughts on, the idea of creating an impact company, for private enterprises and for startups. Is this all about becoming a B Corp, or, how could we sort of understand and frame this a little bit better?
Yeah, that's great. So there are a lot of different ways that early stage companies can think about their impact. They can look at their hiring practices, they can look at the board composition, they can look at their operations internally, or they can look at their impact driven by sales of products and services. B certification really focuses on the former. It's looking at operational footprint. It's looking at who you're hiring, what your board looks like, who you're procuring supplies from, where your headquarters are located, etc. It's strictly retrospective, and it provides a wonderful framework for companies to understand both where they are and how they can improve. Then there's product-based impact for particularly startup companies that are selling products or services that themselves drive impact. That's really where Impactablex focuses. This is a relatively nascent space, but more and more companies are leveraging technology to solve social and environmental problems. And so this approach can be generated retrospectively or can provide forecasting for social entrepreneurs to articulate the impact potential they can have over a given period of time. And so that's really where Impactablex focuses and evaluates the relationship between revenue and impact. It evaluates a business model's efficiency and efficacy as a lever for impact. And so just wanted to sort of set the stage. If you're a company that's hiring certain populations or is really focused more on the internal side as your key impact driver, definitely look towards B Corp certification. If you're selling products and services, there may be a better way to articulate your impact. But what's really important, I think, is that you prioritize it. You learn how to tell your story and incorporate it into the DNA of your company. I hope that's helpful.
Yeah, so that's great. And by the way, I'm going to open it up to the audience too. Just if there are questions as we go through this, I didn't say it in the beginning, please feel free to ask them. I think, we have 30 minutes in the first part of this program, so I imagine it's going to go pretty fast, and we have so much we could talk about. So if there are questions, interrupt us. I guess since we're still on Zoom for now, you guys can't throw something at us or, wave hands, but I think we have the ability to take questions. But no, thank you for that, Catherine. And so Yvonne, I think with all of that in mind, perhaps you could help us understand a little bit more about Social Venture Circle and your views on impact as an investor. And, if there's anything in particular that you look for, is it a particular certification or other softer analytics, or or what are you guys really looking for in making your investment decisions?
Sure. So I guess, as an impact investor in the angel space, I definitely feel, there's the impact on the company side, there's the impact that you feel as an investor that you're making. Maybe start from that. I would say I definitely feel that the investment in startups, it's much more directly impactful to help entrepreneurs who are making a positive difference, as relative to like any investors. You are trying to balance your portfolio and you want to make the right allocation to, for example, angel investing, and you have these public companies, and it's great, of course, to see the public companies in your portfolio, for example, to make a climate pledge. That's definitely a positive thing, but again, it's just really a very kind of a direct impact that you feel by allocating capital to the angel impact space. As I mentioned earlier, I invest through SVC, which is a national network, and the Philadelphia chapter is a very active chapter where we invest in startup companies locally as well as nationally. We're a group of individuals with various experiences and background, and we put our experiences together and look at deal flows, due diligence, and investing companies. We're a very active group, and we funded quite a number of interesting companies over the years. The member of our group also stepped up in 2020 to support companies that need capital to survive and thrive, hopefully, while facing really unprecedented challenges. So it has been a very interesting and exciting journey to be part of all of this. Now, to consider the social impact of a company is really front and center in what we do. Impact is a concept that comes up very early in the process, and we talk about it in our pre-screen process. We ask the question, what is the impact of a particular company before bringing them in for further due diligence? A lot of the, I think Catherine gave a really good overview, and a lot of the components that she talked about, whether it's externally, product, or internally hiring, and we see all of that in the spectrums of the companies that we looked at. Given that these are early stage companies, we typically get involved at the seed and Series A stage. So the impact needs to be, of course, forward looking, and they need to be pretty straightforward from our point of view. So we look for companies with a clear mission of making the world a better place. It can be through innovative technology that brings positive impact to the environment. For example, we funded a company that used patent technology to manufacture safer, cheaper, and more energy efficient building insulation materials using recycled cardboards. So they're doing really well. They're currently working hard to meet increasing demand. We've also invested in a company, again, with patent technology to process wastewater in a very sustainable and environmentally friendly way. This company actually counts a leading global food and beverage company as their client. Other companies we invested in have missions focusing on social, racial justice, diversity, or inclusion. For example, we have funded a software company that 75% of their employees are on autism spectrum. They actually have had great success with these employees working on projects for Fortune 500 companies. We've invested in MOCAFI, Christina's here. They are African-American owned fintech company. They're really at the forefront of social and racial justice and inclusive because they provide financial services to lower income companies, lower income American families. So 2020 was a very uniquely challenging year for everyone, including MOCAFI. And we're really happy that we are, part of the group that really supported them. So I'm sure Christina can talk more about what they do and the impact that they're making.
Thanks, Yvonne.
Great.
So as Yvonne said, MOCAFI is a MWBE certified corporation. We are African-American owned, as she mentioned. We are located in New York City, and we are helping underserved and unbanked communities, individuals, as well as small businesses get access to capital. And how we're doing is that we are able to partner with municipalities. We're able to partner with strategic partnerships. We're able to partner with CBOs, community-based organizations, and getting access to so much needed funds for people during, crises like the pandemic. So we have worked with the city of Honolulu. We worked with an organization in Bedford-Stuyvesant, Brooklyn, to get, multiples of like $400 and $500 to immediate financial relief to families so that they could buy groceries, help pay their rent, able to really get these funds out into the community really quickly. And they're able to do that on our financial platform. Our platform is a mobile-based app. You can download it to your phone. So it's mokify.com. It's available in the Google Play Store, obviously in the Apple Store. But again, with using our platform, you're able to get these funds really dispersed very quickly into your hand. We've got the capability to do a MOCAFI branded product, as well as a bespoke product, which can be branded to the dispersing institution or organization that wants to get the funds out in the community. We're able to provide these funds, as I mentioned, very quickly. We can get the funds out into the community. And so we are working with a number of municipalities across the United States. We've got a big launch happening in LA as we speak. We're working with New Orleans, Chicago, Birmingham, Columbia, South Carolina. And so we are looking to get into these cities and get these relief funds that the mayors and that the city and municipalities have at their disposal to get out really quickly to, like I said, the most needed underserved communities. And typically these communities are not on a traditional bank's radar. And so like Yvonne, I have a 20-year plus Wall Street background in financial services from the large bank. And what attracted me to come work, with MOCAFI and doing this mission is that this is a population of people that are not normally looked at for traditional banking. The KYC is, more accessible and able to do that because we typically do the KYC on the dispersing entity versus the individual because they're distributing the funds out to the people. And like Yvonne said, you were able to do this with a round of angel seed investors. We did some Series A financing last year as well in 2020, and really able to move the ball forward in our pipeline and get these funds out to the community. We also have an additional DDA, which is a demand deposit account on our platform. And if you sign up for our DDA product, we're able to help you build wealth. We're able to help you build credit. We have a credit reporting tool within our financial app as well that helps you be able to track you're paying your rent on time for a certain amount of months, therefore building credit. Therefore, ultimately, the goal is to help you potentially partner with a mortgage company and be able to qualify for a mortgage. So we have strategic partners with large corporate companies like ride shares, and like I said, some of the mortgage companies out there as well. And so within this universe of people wanting to come together to do mission-based, impactful services and social engagement with the communities, they're able to, again, get these funds out quickly, again, to get to a universe that they wouldn't normally necessarily work with, but during the pandemic and seeing so many communities in need of services rather quickly, partnering with a MOCAFI allows you to do that. So again, it's MOCAFI, MOCAFI.com, Mobility Capital Finance, also known as MOCAFI, and happy to answer any questions. Thank you.
That's awesome. That's really great. I mean, I think it's an awesome mission, and I probably could have 10 more follow-up questions for you here. But I want to make sure we get Robert briefly, because I think, so we've heard from Yvonne on the investing side, and Christina, we know has raised some capital, and love to hear more about your experience there. But Robert, I know Azavea has not raised any capital. So have you guys explored any other alternative sources of capital that are available for benefit-focused companies?
Yeah, thanks. That's a good question, Michael. You're right. We have not pursued investment capital, but nonetheless, as we've grown from me just working out of my apartment to the company we are today, about 50 people, we have needed capital to help us grow. And so we've pursued that in 3 different ways over the years, often in an effort to fund product development or expansion. So the first is that we have sometimes partnered with our customers, customers who had an interest, who perhaps couldn't fund the entire product they would want to see, but were willing to sign up for several years commitment in order to be first in line and to have a chance to shape the product that we developed. And so that helped us sort of underwrite some of the risk of investing our own cash flow into that. The second is we've pursued federal research grants under a program called the Small Business Innovation Research Grant Program. Several federal agencies offer this. If you're inventing new technology and it fits with a federal agency's particular set of priorities, these provide a way to have technology investment, specifically to fund innovation, and do so in a way that's not dilutive. They don't take a share of the company in the same way that an investor would. They're longer. They're organized into a couple of different phases. First is a 6-month prototyping phase, and then if you complete that successfully, then you're eligible to apply for more expansive funding. But it can be up to $1 million or more in each grant, and we've been fortunate to win several of those from NASA, Department of Energy, National Science Foundation, and so on. And then the third is going to the bank. In some we've had situations like the previous downturn in 2009, 2010, when our clients didn't pay us on time. We were profitable on paper, but we had no cash coming in. And so having a line of credit was a lifesaver and enabled us to continue to grow through what would have otherwise been an impossible situation. And your other panelists may have other things they've taken advantage of, but those have been 3 ways that we've done so apart from our own cash flow and reinvesting our own profits.
Oh, it's great. That's great. I think that's really helpful. So I guess maybe as a next question, and this could be somewhat open up to the panel as a whole, but you know, in terms of companies that are looking to get into this space or some next steps, I mean, how do you qualify? Robert, I know you guys are as a B Corp, or you know, Christina as an MWBE, and you know, Catherine, maybe on your end, I mean, how do you assess impact metrics for an early stage firm that doesn't have a lot of data yet? I realize it's a lot of different questions, so you know, we can whoever unmutes first can go first.
I'm happy to take this. And it's a great question. I mean, early stage companies have so many conflicting priorities. They have limited time, data, and resources, but massive possibility and potential. And so we think about articulating impact as sort of capturing the full value a company can generate. Oftentimes impact is externalized. It's borne by the commons, right? Reducing carbon from the atmosphere, that's external to a company, but it's value creation nonetheless. And so when we first start working with a company, we begin by defining their key impact metrics. Maybe they know this already, maybe they don't, but we look at the measurable expressions of impact that are most meaningful and measurable for them and their business model, their technology. From there, we always align with global standards, which the audience should know about if they don't already. The Sustainable Development Goals have targets and indicators that are very helpful for companies thinking about what metrics might be appropriate for their particular business models. They also have an SDG tracker tool, which is worth checking out. The IMP has Impact Management Project, has 5 dimensions of impact, which helps you think through, you know, what you should be measuring. And then finally, the IRIS Plus, which is a project out of the Global Impact Investor Network, has a taxonomy of core metric sets. So you can search for the particular area of impact your company is driving and see what the commonly referenced metrics are for that particular area. But we put global standards aside when we first work with a company, and we have a conversation about their unique business model, the use case on the user side, and really sort of define the metrics that are most relevant to them in their work. And so that's a great starting point for a company, you know, who may not know really where to begin. Think about, you know, even like 1 to 3 things that you can start measuring. And if you don't have any impact data, we work with companies to make some initial assumptions when we build out their model, just like they're accustomed to doing on the financial side. You know, of course, we inform these assumptions with third-party research and comps, and then help companies put measures in place to collect data over time. And of course, your forecasting is as good as the data that goes into it. But there is absolutely nothing wrong with beginning to make some initial assumptions around the impact you think your business can drive over time, and be prepared to defend those assumptions with investors. It can provide much more insight into how you're thinking about your business, how you're thinking about your impact. And if companies need some, you know, help thinking this through, I'd be happy to connect.
I just want to reinforce what Catherine said, that the company at its earliest stages there's just a ton of different things it has to do, and may not even have the data to go after something like a corporation certification. Like, you don't even know, you can't be sure you even have a business. So figuring out the business model and how that ties into your potential impact is probably the most important thing you can do. One of the things that B Lab is the name of the nonprofit organization that certifies B corporations. They've recognized this, and they've created a much smaller, shorter, sort of quick version of the B Corporation impact assessment. And you can go through that. It won't result in certification, but it will give you a sense of the range of things that are considered, and can start to give you a roadmap for how you might eventually go for certification once you've got the business off the ground and are starting to generate impact.
And much like what Robert said, you know, so the certification that we have went after is a little different. So the MWBE sort of certification is done by state. So in your respective state, you would go to their website and fill out the application. It is, you know, pretty intuitive, but there are, you know, on the website, it'll give you links to agencies that can help you, you know, state and local agencies that can help you if you run into problems. In terms of MOCAFI, you know, we were founded by Wole Coxum, who's our founder and CEO, who's also former investment banker off of Wall Street. And just, you know, the impacts of seeing what happened to the Mike Browns and the George Floyds of the world is kind of what brought him into founding this financial services platform, and how it could help people, you know, get access to financial services and money movement to help them build, you know, wealth building and closing the wealth gap, as well as financial education and financial literacy. So financial inclusion is really important to us. Financial inclusion matters. Getting financial information and financial services platforms to people of color is something that we've been very passionate about. And so the connections coming from Wall Street probably put us in a unique place, because our CEO and founder had a lot of connections to a lot of the big C-suite people at a lot of the financial firms. And so I think networking, he's always networking, he's always out there, he's always speaking. And so his relationships are helping us get to the people like the Yvonne Foods and SVC of the world, getting to the, you know, the Citibanks and the MasterCards who we partner with as well. So I think constantly, you know, meeting people through panels like this, having discussions like this, talking about the mission focus and who we're trying to help, you know, talking about the application status for a B Corp through like a B Labs, or going through a MWBE certification, and kind of where to go on the state websites and who can help you with that. You know, we're all here to share that information. We're here to talk about it. We're here to help in any way. And so, you know, we're always happy to share that information and get the word out of how we can further social impact engagement and invest in companies like, you know, startups like MOCAFI to further closing the wealth gap. So always excited to do that. Hopefully that's helpful. Thanks.
Oh, realized I was still on mute here. So that's great. That's excellent. And I think we had one question, although I'm not sure. I think we have to switch panels shortly. So Anthony has already answered that. So maybe we can have that on the next panel. If we have 1 or 2 minutes left until they tell me we have to transition to the next part, I am kind of curious. I mean, there seems to be so many benefits to being a benefit-focused company, to adopting some social purpose. Whether it's having access to more investors like Yvonne, whether it's, having these additional certifications, which I'm sure will help with recruiting and, with your customer focus. Is there any company that really shouldn't try to adopt a benefit focus, or, anybody that really shouldn't be looking to get into this area? Yeah, go ahead, Robert.
I'll just say, I think there are companies that would have a hard time qualifying. MWBE, for example, has very clear qualifications, and you have to have a certain ownership structure to qualify in that respect. For B corporations, you have to hit a certain threshold. I would say that any entrepreneur should be thinking about the impact they're going to have in the world, and that often entrepreneurs are motivated and energized by how can I put my a dent in my corner of the universe. And I think sometimes that's can be recognized through some kind of certification process. Sometimes it's not, but it often is a chance to it often is the motivating factor that brings an entrepreneur to the table. And hopefully it's not simply about financial gain for financial gain's sake. I think we all should be considering our role in the world and the impact we can have.
Listen, I mean, 86% of millennials inform their purchasing decisions with the brand of the company. If a company is driving impact in the world, millennials care about it. They take note of it, and they want to align their purchasing decision makings and their employment with companies whose values align with their own. This is a space that is just exploding. The social impact club at Wharton is the most oversubscribed club on campus. I mean, the companies that are able to prioritize their impact, leverage it to engage and retain talent, drive sales and marketing, and engage investors are going to be the ones that succeed over time. Investments that are made with an ESG lens outperform investments made without them. I mean, this is the business case behind impact is really growing more substantiated by the day. And so it's a strategic move as well as, an altruistic one. And, I think any company that has an impact focus is leaving value on the table by not articulating it.
Yeah, just to echo on that point, I think impact and returns, investors, from an investor's point of view, looking for returns are very much aligned. On a broad level, I think all successful business needs to think about sustainability because ultimately the sustainability of the business is aligned with the sustainability of the planet and society as a whole. So hopefully, there'll be more of a positive flywheel where as a company even set out to make a profit, and you need to think about all your stakeholders. And certainly that's where the trend is heading.